Good morning, everybody. Welcome. Hope everybody's doing well. Hope everybody had a great long weekend. Dang, I forgot to send that out. Good morning. We'll get started in just a couple minutes. Let everybody file in here. Good morning. Good morning, Will. Good morning, Jim. Looks like we had a little pop there on some news, some Iran news. Looks like we just popped up to like 68.28 though, so not very significant. Oops, sorry about that. Okay. Okay. All right. Good morning, everybody. We'll go ahead and get going. This is Michael coming to you from Game Edge on Tuesday, February 17th, after we had the long weekend and Monday off. Hope everybody enjoyed the weekend. We'll get right into it. Our three pillars here at Game Edge will cover is sentiment, structure, and trend, and then we'll go over some individual equities at the end and just kind of talk about the state of the market and what we're looking at heading into OPEX on Friday, so monthly OPEX. So let's go ahead and jump right into it. Again, market trend model. This is our trade station based on the tick index. Bolded white line is your intraday instantaneous cumulative tick. Again, buying versus selling in the overall market. And the colored ribbon is our longer positioning look back period. If we're above the good morning, Valtrain. If we're above the colored ribbon, obviously our mechanical portfolios are turned on. So we'll be entering our PGEX to P-Trans as well as our wheel strategy. It is turned on today. We have a new trigger. So putting some capital to work today mechanically. So we'll see how that plays out. The bolded white CT is above the shorter term railroad track moving averages though. So that's a little bit weak in state, but we are above the colored ribbon. And then on Friday, you see new highs versus new lows. Really nothing happening there. We did see new highs outpacing new lows, but not a significant move up. The filtered cumulative tick here, plus 1,000, minus 1,000 buying and selling orders, really fairly flat. Plus 18,000 is in the positive state, but not really a linear up like you saw back here when the market was moving up, or we've really been weak the past 3 days heading into Friday there. So again, we'll keep an eye on this. We want to see us recover those shorter term momentum moving averages really quickly if you're a bull. And if you're a bear, we'd like to see, you would want to see us start cutting into the colored ribbon and possibly exiting the colored ribbon, moving to the downside, indicating there may be a larger pullback in the overall market. But the key takeaway is we've been sideways really for multiple days since that move up on the 10th. And then we've just been consolidating sideways, and it's just a massive chop range that we've been in. So that's what I cautioned people last week. We're in a range. We're not seeing really any move in the market trend model either direction, and we're heading to monthly OPEX. So just staying capital preservation mode was most likely what we're going to be looking for. All right, the trading view market trend model. Again, we saw the move up again in the intraday, and then some weakness start creeping in really around 2:30, and then we finished below the momentum moving averages there. So again, we tried to start moving up, but then failed and kind of got weak towards the end of the day. So yeah, chop. And that's what we've tried to identify and tell our members really the past week. Structure was not advancing, market trend model was not advancing, and all of our tools were basically weakening in the overall structure. So we were telling our members, obviously, just be in capital preservation mode heading into the monthly OPEX. No reason to be a hero, especially if you started out the year being on the right side of the market and doing well, just be in capital preservation mode and wait for those setups, right? Wait for better risk reward identified setups, and whether that's in a call dominated structure and environment where you have better supported type action on pullbacks and price appreciation, then that may be what you want to wait for. All right, SPXA heading into the monthly OPEX, we're put dominated, well below transition area. All of this is a weak structure. 6,800 is going to be a key level to stay above. We get below 6,800, we'd anticipate more weakness down towards 6,750. And then after the monthly OPEX on Friday, we'll move over to the March, and it really looks about the same. So put dominated, even though the transition expands, we still have those key areas below us: 6,800, 6,850 overhead, and 6,900, and then all the way up to 7,000. So actually, we could still be stuck in this range after this OPEX, unless we break really 67.75 to the downside. I think below that, we'd probably see some more weakness start to come into the overall market, and then might see a little bit larger pullback, maybe heading into the 5 to 7% range. But we'll just continue to watch this. Again, structure is really weak, but it's not advancing either direction. So we're really just kind of stuck in an overall chop range. So SPXP, again, SPXA is our cruise ships or our tankers. Those are institutional positioning, obviously monthly expiries, basically driving your 40,000 foot view. And then we had the SPXP, which are our speedboats, upper quartile picked with our web app, put dominated, well below transition, extremely negative net deltas, as you would expect, put dominated. You do see some positive charm here below us that could be supportive. We already talked about that: 6770, 6775, 6800. Key levels to stay above, and if we see a pullback down to this area. We are reaching extremes, though, and probably looking close to a monetization bounce on puts, where put holders will probably close into monthly OPEX. You see a bounce, but if that is not met with out-of-the-money call speculation, with put monetization can only drive us so far, and we'd anticipate that would drive us up towards the bottom of those key transition areas. So again, put dominated heading into the this week, and we'll look at the other tools here. Delta balance, SPXP. Let's move to the GEX ratio first. GEX ratio is like a put call ratio, but we add a time component, which is gamma. So this is weighted towards short dated call versus put gamma. So heading into this week, we're looking at a negative slope, well below 1. Put speculators are in overall control, bearish state. But we're hitting that 0.5 level historically, where we've talked about where we see a bounce or at least a relief rally. On Friday, we saw that really heading into the day. We had a 0.5, and then we saw a relief rally, which is basically was a dragonfly kind of doji type look of the overall market. We tried to move up and then just finished really in the middle of that range. But we're at the 0.5 again. So again, it could be a monetization event today where we see a relief rally. We'll have to get back above the 1 level. We want to see this in a positive slope, indicating out of the money call speculation coming into the complex, and out of the money put hedging starting to abate a little bit. So again, we'll watch this. We would anticipate some sort of relief bounce with our overall tools, but it's not necessarily set in stone that we would get that. All right, moving on to the delta bounce. Again, this is separating the structures. The right-hand plane, which is a green dotted line above spot price, that's your out of the money call speculation, in the money puts. You see a severe negative slope under the 0 line. So again, put dominated, bearish overall control within the money puts overhead. It's going to be difficult for price appreciation. You see the left-hand plane actually has a positive slope, but well below 0 again. So again, that's bearish, and out of the money put speculators are in control. In the money calls are being overridden by put speculation, even though it does have a slight positive slope. And then unfortunately, the further expiries out in time for the rest of the week are extremely weak, even heading into the monthly OPEX. And then actually into Monday is still extremely weak also of next week. So we'll watch this to see if we see any change in structure and sentiment or positioning. As of now, the structure looks extremely weak through the rest of the week, even if we do see some short-term bounce. Again, this is driven by spot price. It's spot price sensitive. So if we do see spot price jump up significantly, then we could see some of those out of the money, or some of those in the money puts become out of the money and start capturing some more out of the money calls above spot price. So again, this could drive us back above 0. But right now, looks weak heading into today. Middle of the week looks weak, and heading into monthly OPEX looks weak also. So we'll continue to watch this day over day. All right, let's move on to the SPXP net stack command. This is high sensitivity levels we'll be looking at for today, as well as our transition levels. That's a new tool we added to the net stack command. You see we're put dominated across the board, really in all the Greeks, Delta, Charm, Gamma, and Vanna. We do see the opportunity, net Vanna, and the right-hand plane is slightly larger than the left-hand plane. So if we do see a drop in volatility, as well as out of the money calls come in, we could see a Vanna tailwind, not significant at the moment, but we have to get above 68.50 is where that really strike price would be. And then you see 69.50 here, 68.50 for the Charm level. Again, out of the money puts, or sorry, in the money puts overhead, going to be a significant headwind. No transition areas found on those, but 68.50 is that right-hand plane area where we'd look for that. And then obviously CC Gamma at 68.20. And then obviously 69.50 net delta significantly above us, and in the money calls all the way up to that area. And so we're going to talk about that as we head into the SPXP 0 DTE. I posted this morning on X, so make sure you like and subscribe on X and YouTube. You'll be notified when we post content. But that 68.40 area we just talked about in the net stack command, we'll give it, this is 69.50, but the 68.40 area overhead, 68.50 is that significant charm level that I'm discussing right here, bottom of drunken sailor range. So to get above that area would be the first area we'd look for some stalling and most likely rejection. As you see, the charm starts to come in there, really becomes a headwind. And then the transition areas at 68.80 and 6900. If somehow we do get above or into those areas, then obviously we could have the opportunity for price appreciation, but that was the next area we look for stalling if we see a relief bounce to the upside. And as of the open, we're just hanging around 68.20, and you can see the net charm, or sorry, net gamma there. If we start moving through there, we do have some opportunity to move up towards that 68.40, 68.50 level, which is the bottom of the drunken sailor range. But put dominated, so again, significant headwinds overhead. It's going to be difficult for price appreciation unless we see these in the money puts starting to get a little bit of fear from spot price appreciation, and then we see some monetization. And as you see, there's significant in the money puts. So if we start seeing a monetization event, spot price could drive up very rapidly up towards the bottom of transition at 68.80. So that's what our trading plan is for today. Basically, continue to short any bounces to the upside. 68.40 is the first stalling area. And then if we see a run up towards 68.80, we look for some stalling and rejection into that overhead area there. So again, thanks for joining us. This is being brought to you by GameEdge.us. Click on the newsletter, put in your Beyond the Bell, and you'll be or put in your email. You'll be delivered Beyond the Bell newsletter, free courses, GameEdge Fast Pass, flagship options course. It's free. Put in your email, and we'll deliver that to you. And then click on the pricing tab. You can always join us in the Discord for a 14-day free trial. All the tools turned on. All right, let's go ahead and look at some individual equities. I see somebody posted QQQ, so we'll check that out. Qs remain put dominated heading into today. Again, significant overhead in the money puts. 600 is that key area. And you see PGEX at 603. Absolutely. Yeah, thanks for joining us, Brendan. We'll go ahead and look at the trading view chart. Let me drag it over real quick. So trading view chart heading in, you see 600 overhead, POI, and negative GEX. So it's going to be key area to get over. And then you have Intrans at 604. So just significant headwind. Even if you get a relief bounce, those would be the two areas you would have to get above to start. So, all right, let's look at NVIDIA. NVIDIA upper quartile. So NVIDIA is so-called dominated. I actually looked at this one over the weekend. It actually still did not look too bad. Let's look at Friday's expiry. Put dominated into Friday's expiry. Obviously overhead 175. Spot price is staying above that key area of 175, and you're at transition area 182.50, and we still have 195 overhead. So if the market gets itself in gear, I think NVIDIA will be one of the first stocks you could see start to move up, especially on the upper quartile. You see it's still call dominated, even though we're within the large transition, but you see PGEX still up at 200. So market speculation is still up towards 200 on out in expiries. And then you see in the money calls below us still, even though we're all the way down to 160, but still supportive type action. So NVIDIA still looks good within the overall Mag 7 stocks that have just been, kind of pulling back significantly. Carvana, put dominated, well below transition, extremely weak here. Put speculation to the downside, looks very weak to me. And the monthly expiry, put dominated, well below transition. Carvana does not look like a stock that could have the opportunity to move up. AMD, let's look at this Friday's expiry monthly put dominated. 187.50 is going to be important below transition there, but you have in the money calls below you, even though you're put dominated. 220 to the upside. AMD still looks fairly good within the overall structure, even though we are put dominated, but we're slightly below transition, but significant in the money calls below us still. So 187.50 to 190 would be the key area I look forward to stay above. And then to the upside, we actually have PGX up towards 250. So you have speculation all the way up towards 250, even though you have some in the money puts overhead. So AMD still looks fine, even though it's put dominated and weak. It's not, the structure is not completely falling apart. So PLTR, I think this one looked fairly weak to me. Actually, no, that was something else I was looking at. I think that was ASTS maybe. So call dominated PLTR still looks good under transition though. So staying above 120 is going to be key. In the money puts overhead, pretty significant. But you have the call domination below you that's basically ruling the overall structure, which is good. Upper quartiles put dominated below transition there. So the structure looks fairly weak overall, even though we're call dominated into this Friday's expiry. You have a ton of in the money puts overhead. So depending on when these expire, we could click through this and see when these leave the overall structure would be the opportunity to for price appreciation. But below transition is obviously the key though, right? So watching that, if it moves above transition or the structure continues to advance, then that would change my overall thinking on PLTR. PNW, let's look at this Friday's expiry for monthly OPEX. Put dominated, below transition, fairly weak. In the money puts overhead, doesn't look very good there. Put dominated, upper quartile, well below transition, 170, and you're actually below index, which is 170. So that's fairly weak on PNW. Apple. So all expiries are actually call dominated. Let's look at for this Friday's expiry. Put dominated, you're at the bottom of transition, in the money puts overhead. So even if we get a bounce, 260, 250 would be where I'd be looking. 250 to the downside, upper quartile. Call dominated, that's good after this Friday's expiry. So structure on Apple actually still looks really good. And you're actually above transition area on all expiries. So if the market decides to turn around, this would be one of the first stocks I would look at, just try to get involved because structure still looks really good on Apple. IBIT, I think it was call dominated on IBIT. You're within the overall transition, so probably going to be choppy. Looks supportive down towards 38 and then actually 36 looks supportive. Let's look at the upper quartile. So put dominated there, large transition on the upper quartile. So actually this Friday expiry looks fairly good. Actually, the 18th looks good. Tomorrow looks good. This Friday's expiry doesn't look the greatest. It looks a little bit weaker. And then the upper quartile looks a little bit weaker. But you're at the bottom of transition still. Just IBIT looks weak overall. So not one that I would just jump on. I know this is obviously Bitcoin ETF. And with the Bitcoin weakness, I'd like to see this structure improve, basically turn at least towards call dominated. And the transition narrow, and you start moving up above the transition. So how's the SPX look like as of now? Sure, we can look at that. We'll look at SPXP. I can go through the different expiries for you. So here is today's expiry. Let's go ahead and add on the rest of the expiries, and then we'll look at that. Put dominated. So I already talked about this on delta bounce and GEX ratio. Structure looks very weak. You're well below transition area, 68, 65 overhead there, 68, 80 on the transition area there. Need to hold 6,800 below. And then Friday's expiry isolated, extremely put dominated, as we just discussed, very weak. And then heading into next week, we'll go ahead and look at the 23rd. I'll just do the 23rd through the 20th, or I'll just do all of next week. How's that sound? Put dominated still extremely weak, as I talked about in the structure, or in the delta bounce, as well as the GEX ratio. So this would have to turn around pretty significantly for us to have a sustainable move to the upside on the SPX. Not saying it can't, but just the way market participants are positioning on out in time towards the end of February still looks fairly weak. So absolutely, Brendan. That's why we use the web app, and you can click through each expiry and see how the expiries change. We have an OI change tool within the Discord. You can see the OI change. the closing and opening of mechanical of contracts. And then we have the two other tools we went through, which is actually the delta balance and the GEX ratio. The delta balance for me is really one of my favorites, and you can use this for individual equities. This tells you market participant positioning for the rest of the week on out in time. Really, our high end of positioning is looking about 6 days out. And then we have a much better grasp on 3 days out for market participants, because obviously it can change. So Monday into Friday is a good space for understanding positioning. So again, as I said, that's how we mechanically go through each one of these individual equities, as well as SPX, SPY, and Qs, understanding where market participants are positioning and how that changes on out in time. So hopefully that helps. So here's 0DT for today and the overall structure, transition areas, and what we're looking at for an overall bounce. So 68.18, not a significant bounce. So 68, as I discussed, we're going to have to get over 68.35, 68.40 first. That's going to be the first hurdle, and hold above 6,800. So, all right. Absolutely. Thanks everybody for joining us. As always, manage risk, and like and subscribe on X and YouTube. Share our content. You'll be notified when we go live with any of our content or post any of our content. And make it a great day, and we'll see you later.